Welcome to today's market report.
European stock market traded lower on Wednesday, with investors wary of chasing recent gains ahead of the second quarter earnings season, while the European Central Bank signals it could be now on hold for some time. At 8:30 London time this morning, the DAX in Germany traded 0.3% lower, France's CAC 40 fell 0.5%, FTSE 100 was down 0.2%. In an interview with Financial Times published on Wednesday, ECB President Christine Lagarde signaled the central bank may keep policy unchanged for some time after it almost doubled the size of its pandemic purchase programming to 1.35 trillion euros last month. There was some positive economic news to digest as the French economy, the Eurozone's second biggest, is set to rebound 19% in the third quarter and a further 3% in the fourth quarter, according to estimates from the INSEE statistics agency on Wednesday. That said, over the course of the year, INSEE estimated that the economy was set to contract 9%, France's worst recession since modern records began in 1948.
Meanwhile, the number of coronavirus cases keep on increasing globally. There are almost 11.8 million COVID-19 cases globally as of July 8th, according to Johns Hopkins University data, including, as of Tuesday, Brazilian President Jair Bolsonaro, a vocal skeptic of the pandemic. This has translated into caution on global equity markets. After several days of rallying, much of Wall Street turned lower on Tuesday. Asian markets and now Europe have largely followed suit, with an eye on what is likely to be a dismal earnings season. Aviva investors commented this morning, "It is not unusual for stocks to take a breather at this point. We could see ourselves in a bit of a trading range in the next couple of weeks." In corporate news, HSBC stock dropped 3.4% as the US contemplates measures to sanction banks in Hong Kong after the passing of a new national security law in the city. Boohoo stock slumped 6.8%. Facing a backlash from retailers following a report about dire working conditions in an English factory that supplied the popular brand. On the flip side, Electrolux stock climbed 5.4% after it reported a smaller second quarter loss than expected, driven by organic sales growth of 3% in June and successful cost cuts. Oil price weakened on Wednesday amid worries about a smaller than expected decline in US crude oil production in 2020 and a rise in US crude oil stockpiles. Government data are due later today. US crude futures traded 0.1% lower at $40.58 a barrel. The international benchmark Brent contract fell 0.1% to $43.05 a barrel. Gold futures fell 0.2% to $1,806.65 per ounce. On the FX front, GBP USD is trading around 125.50, holding on to its gains. UK Chancellor Sunak is set to lay out the fiscal stimulus plan. Brexit remains deadlocked as PM Johnson told German Chancellor Merkel that Britain could leave without a deal. According to HSBC, the cable lifted higher towards 126 on the back of Brexit optimism. The market bet on Brexit compromise deal lifting the cable higher towards 126. Nevertheless, the deal was forthcoming and the GBP USD pair subsequently retraced lower. Short-term implied valuations remain pointed south. For now, any upward extension will have to breach 126 before targeting the 200-day moving average, which is 126.96. Eurodollar is trading below 113 steadily. The common currency has been given some ground as stocks retreated and the dollar clawed back some of its losses, but that seems limited. Investors are eyeing uncertainty about EU fiscal stimulus and the US COVID-19 statistics. US COVID-19 figures coming out of various US states showed that infections topped 10,000 in both California and Texas, with the latter struggling to manage its overwhelmed hospitals. While cases in Florida remained below 10K, the positive test rate is at a worrying 16%. Overall, the US has over 3 million confirmed cases and around 131,000 mortalities, and the death curve has stopped flattening. At 8 o'clock London time this morning, dollar index was up 0.1% at 96.873. This is today's market news. Thanks for listening. We'll see you next time.